All right, let's get straight to it. The key to navigating today's housing market isn't about waiting for interest rates to hit 3% again, it's about mastering what we're calling the new normal. And that brings us to this critical point. Whether you're a professional managing much tougher deals, a buyer staring down chronically low inventory, or a seller who needs a far more strategic plan, the single biggest mistake you can make right now is waiting. You're waiting for a baseline that just isn't coming back. So, over the next few minutes, we're going to dismantle the 5 economic realities you absolutely have to understand to thrive in this landscape. Pay close attention because this is your new playbook. First up, let's talk about the single biggest mistake paralyzing this market. I call it the rate wait fallacy. Here's the problem. So many buyers and sellers are completely paralyzed just waiting for the Fed to cut rates. They're waiting for some magic number they think will solve everything and signal the perfect time to make a move. Well, that thinking is fundamentally flawed. And here's the impact of that flawed thinking. The very moment rates hit a trigger point, let's say 6%, all that pent up demand is going to come flooding back into the market. All the buyers who waited are now fighting over the same limited inventory, and that only does one thing: it drives prices even higher. You wait, you lose. The solution here is simple. It just requires a total shift in your mindset. You have to remember, your interest rate is temporary, but your purchase price, that's permanent. Look, you can always get a lower rate in the future, but you can never, ever go back in time to pay today's price. Your job is to secure the asset now. Okay, second reality check. The easy market is gone. And let's be perfectly clear, it is not coming back. The problem is too many people are operating as if we'll somehow return to baseline. This idea that we're going back to simpler times with easy, predictable transactions, it's a complete delusion. This is the new normal. The impact is obvious. Transactions today are 2 to 3 times harder to close. Professionals who are just on cruise control, well, they're failing. Sellers who expect instant, over-ask offers are getting frustrated. Every single deal in this environment is more complex. So, the solution is you have to adopt a foot on the gas framework. Success now demands high-effort, strategic action. We're talking pre-listing prep, aggressive marketing, strategic open houses, and constant communication. These things aren't optional anymore. They are the absolute baseline for success. Third, we need to talk about the myths. It's time to destroy the bad advice that's poisoning decision-making across the board. The problem is what I call the brother-in-law metric. People are making massive financial decisions based on vibes and rumors. The myth they keep hearing is that a 2008-style foreclosure wave is coming. But what's the data say? The data shows that 62% of homeowners in California have mortgage rates below 4%. There is zero structural pressure for a mass sell-off. And the impact of listening to that bad advice is catastrophic. You have gainfully employed high-income renters trapped in these high-rent cycles paying someone else's mortgage. They are missing out on the number one vehicle for wealth creation in this country, period. The solution is simple. You must separate the signal from the noise. The real data points to a stable market, one that's held up by homeowners who have absolutely no financial incentive to sell at a loss. All right, point number 4. You have to understand that low inventory is not a glitch. It is a permanent feature of this market. The core problem is a failure to recognize reality. For decades, we have chronically underbuilt housing in this country. This isn't some temporary condition tied to the pandemic. No, this is a deep structural deficit that is not going to be solved anytime soon. Let me just put this into perspective for you. In Los Angeles County, home to 10 million people, there were recently only 6,000 active listings. Think about that. That extreme imbalance is the very core of this market's dynamic. And because we don't build enough homes, affordability is only going to get worse. So what's the solution? Look, the best time to buy a house in California was 25 years ago. The second best time is right now. And that brings us to the 5th and final reality. And this is a big one. You are probably focused on the wrong segment of the market. See, while the entry-level, rate-sensitive part of the market has definitely slowed down, the affluent and investor segments are absolutely thriving. The high end of the market is outperforming everything else. Just look at the numbers. All cash sales now make up over 27% of the market. That is the highest level in 13 years. These buyers are not sitting around waiting for the Fed. They're acting. So the solution is to focus where the activity is. Affluent buyers and all cash investors get it. They understand that real estate is still the best long term hedge against inflation, no matter what happens with short term rate fluctuations. So let's recap. This is your new framework. One, you can't refinance a price. Two, adopt a foot on the gas mentality. Three, use data, not myths. Four, the second best time to buy is now. And five, focus on the resilient cash market. Master these five realities, and you will master this market. For more information, you can contact Courtney or Tony Self at Harcourt Hunter Mason.